2nd, 2019, and it's almost New Year. It feels like it at least. No, not much sun here in London. Oh, sorry. Well, that's true. But I was gonna say not much snow. That's what I was looking for. But it definitely feels like New Year's and Christmas and that holiday sort of experience. Not holiday experience, but a holiday. It feels like holidays. Markets, a bit of activity, especially in New Zealand dollar today. And we're going to cover that. We're also going to cover other stuff as well, like the Euro USD. So thanks so much for tuning in. I hope you're feeling as good as I am today. And yeah, let's kick off. Hopefully you feel better than me. I have a bit of a stiff neck actually. I've been sitting in front of my screens for too much. That's not good. But overall, in good spirits. That's important if you want to be able to trade well. If not, it's just gonna be becomes really, really difficult. Anyway, enough about me and more about the markets. So euro versus the dollar, it's moving up a bit. It did try to trade lower on Friday, moved down and then up, but it didn't really manage to go much lower or much higher. It's pretty much where it was from the beginning. I do think in the long run we will probably trade lower. The trend is bearish below 111.01, and I think yeah we can probably go upwards, but then I think probably down. So there's no real change to the outlook here. I remain bearish. Trend is bearish, and it might not be very clear from this perspective. So let me show you what I'm looking at. Something I've been using for some time. So this is my Andrews pitchfork. And this whole thing is bearish. It's been bearish. It's data from 2018, 2019, and you can see this in these little lines have been done a decent job. Started to use them here in August, and they projected to move to the downside, and it's still going there. And really, by the end of the year, should be closer to 109.13. Probably gonna be much more volatility by the way next week on Friday after the election in the UK, but overall I think probably going to be more bearish. And if you look at this from a daily chart perspective, longer term, the trend on the daily is clearly bearish, and it's clearly to see when you're using something like this. And effectively, there's different ways of dealing with this, but it really tells us that you have a sell spot on 108.84, 110.84, sorry, 110, yeah, 110.84. So you have that little level, which is exact the same level I shared you in the short-term charts, the blue charts. And if that doesn't hold, you can potentially go upwards again, but we should not trade much higher than 111.85. So that's it really. And GBP versus the USD then. Well, it's just trading sideways here because most people, they don't know what's going to happen in the election. It does look like the Tories are going to gain, but everybody's sort of waiting on the sideline here before taking on any position. Which is the prudent thing to do, unless you have some sort of insight to what may happen, some special forecasting pools and things like that. I do think it was around not the last general snap election, but the election before that, some hedge funds and people like that apparently they had constructed their own exit pools, so they had some sort of inside information, so to speak, before everybody knew about it. But the way the price action is right now, you're not seeing anybody really taking on a big position. Because if they were taking on a big position, especially today, I think that would actually push price around more. Because I don't think there's too much activity here in this market, and there's gonna be probably a surge of orders as soon as the exit pool is out, probably on Thursday evening next week. Until that, we're probably just gonna trade sideways. And you have support here, and this is the November 8th low. And trade below that, and that's bearish, and trade above this, which is the October high, and turns bullish. Dollar yen, it's moving up a bit. You see stock markets are doing really well. The DAX is up with 84 points, 84.9 points on the day. And we talked about buying here last week, and I said, let it go up. Probably look to book profits up here. We reached that level, and now we're finally starting to maybe break away here. But there's some lines here that are sort of definitely limiting price, and it probably just looks to continue for a little bit longer. And what I would do here is I would just buy on a dip, let it go up, but then maybe on a dip, And I think if we do spend a lot of time up here, we can probably reduce turn of funding level a tiny bit, but we'll still be buying dips. Crude oil prices looking really, really good. So remember, we're stuck up here, and I said if we go down here, I think people are gonna buy. We did have a comments by the Russian energy minister. We had an article about that on Investing Cube um, last week. It was actually one of the more popular articles. This one, published on November 3rd, it was really popular, really shot up. This one, so everybody wanted to know what's happening with crude oil, which made perfect sense because the whole thing just collapsed with 5%. And here you can see here that there were some comments by Mr. Alexander Valentinovich and Mr. Novak, and effectively they want to have a wait and see approach when it comes down to committing to further extension and production cuts by OPEC. So OPEC and OPEC Plus, which is what Russia is part of now, this group, they have decided to limit production, but apparently the Russians have been producing more than what their quota said they would do, and they're not really willing to let that go. So that could disrupt market, could provide more supply if it's the situation that we have a lot of more crude available, and that's why the price slid. Now technically here, you know, it's very difficult, comments here, comments there, especially in crude oil markets, but technically, you know, it made perfect sense to buy here, and if you did buy here, you should be up. Should be up with about 67 cents versus a risk of 128. Hopefully go a bit higher so you get that risk to gold ratio you need. Gold prices. Gold prices a bit like the euro, except they didn't trade too much lower. Version forward, check out the November 11th low, would trade lower, go up and then down. That will be my preference. And the S&P 500 is doing quite good. So you might remember we said look to buy here, and I said let it go up and then book profits here. Not much has actually happened since we reached these levels on November 27th, which was Wednesday last week. It's still a bullish trend, and I will continue to be bullish, but I still insist that we need a little pullback like I did said last time. Last time I said let it go down here and look to buy, and the market, you see, market went up like that, spent quite a lot of time here, and then it went down. It's the same thing here. It's gone up a bit, spending a lot of time here, and then let buy on a dip. Now there's also some interesting things. I said it before, and I'm probably gonna say it again. And I have this Andrews pitchfork, which done a relatively good job explaining the price trend here from pretty much January of last year. Obviously, you can always do a bunch of different pitchforks. You know, you can do so many of them. I'm just gonna try some stuff out now. Before I do that, by the way, you can see though that we had a very, very, very strong push, okay? And we're at the upper limit here. So at least on a short-term relative basis, this is definitely overbought according to the pitchfork. And again, you can probably, if you wanted to put a pitchfork, I'm sure you can do another pitchfork here if you wanted to. And that's going to tell you it's not overbought. But you need to make a call at one point and sort of figure out, well, okay, what's overbought and what's not overbought. This is actually a bit more difficult to figure out, but I wouldn't call this a very good pitchfork, but it sort of gives you a bit of an indication. And this upper trend line is here somewhere, so you always get different targets. But when you have this and it's at the edge, and if you have the German DAX, which I also know is at the edge, then you know we need to take this some sort of a warning sign. Now it doesn't mean that we can't remain bullish in the short term. You know, it doesn't mean that we can't buy that pullback in the S&P. It doesn't mean that we can't buy a pullback here as well on the German DAX. So what I said last week, if you're really bearish, you can sell with stops on the other side. Alternatively, if you're really bullish or you want to go with the flow, then you just wait for the break. You just wait for that move as it goes up, maybe closes on this side, and then it goes down, and then it goes up. So if this does like that, then instead of having a stop loss here, probably just put a stop loss here. At the same time, if you happen to be very bearish, you can just sell and just hope it does something like that. And there's two good levels. This is a very good level to buy down here on the long run, and then you have that which might last for a day or two, depending what's going on. You have a few targets. You have the all-time high here, which probably is a good little target if we would break above here. And it's quite interesting. It's a German DAX at the all-time high, which is this one here. Okay, I think we covered all the markets. Let's see if you guys have any questions. Let's go back to my Twitter. So we have True Invention saying hi, Alex. Hey, how you doing? And we have Marvin as well saying good morning. Good morning to you, Marvin. I hope you're doing well, and thank you so much for joining me this Saturday. If you didn't know, guys, we had an online summit this Saturday on Investing Cube, the online trading summit. We'll see if we can. I'm gonna try to cut all the videos and prepare that so you guys can watch that if you didn't watch it already. So we had a ton of fun. We had 6 different presentations, and it was all free to join. If you want to know more about it, I'll send you the link here. I hope to be able to again prepare a page here, so if you did miss out, you can just watch the videos. Okay, we don't have any questions here, so we're gonna wrap things up. If you do have any questions during the day, as you know, you can always reach out to me via Twitter at AlexFX00. It's quite straightforward. Just do that. That's the best way to keep tabs of me at Twitter. Everything I do usually goes on Twitter. So click on that. And if you have any questions at all, you're most welcome to reach out to me. Have a great day, guys. Thanks so much for watching, and I'll see you guys tomorrow, same time here on ATFX YouTube channel and on investingcube.com. Thank you so much, and bye-bye. Cheers.